Hi, everybody. Scott Riley, the Market Update Desk. Monday, January 27th, the last full week of January, and man, it's flown by. Well, congratulations to all you that are Chiefs fans. The rest of us are looking on to next year and not that excited about the Super Bowl of Kansas City and Philadelphia. Now, we had a really interesting surprise come in overnight trading out of China, and it definitely helped mortgage rates today and the 10-year bonds, mortgage backed securities. So there was a large trade sell off, especially in techs and pre market trading, which has now continued into the live day. What we are seeing from this sell off is a flight to safety, being the 10-year bonds from riskier assets like stocks. Now, what caused this flight to safety? It was a relatively new Chinese startup called DeepSeek. Now, they delivered an AI model similar to ChatGPT with similar results, but they are reporting in that they developed this in, I believe, under 6 months, so a very short period of time, and at a fraction of the cost of ChatGPT and many of the other things out there that are existing. They're talking $6 million they delivered this to, and look at what Facebook's, the multi billions are looking at investing into AI. So this was a market shakeup. Now, in addition, apparently, it's more efficient and can run on older, less expensive chips. Now, this is a direct hit to NVIDIA. That's why their stock's down 12% so far. Um, it's going to drag down the stock market. Now, the question is going to be how long. In the meantime, the bonds are being the big beneficiary of this. Now, it'll be curious on what really comes out of this deep seek as we move forward. In fact, 10-year bonds in pre-market were down 10 basis points. They've held on to that and are down 8 basis points, and we're sitting at 4.54 on the 10. Mortgage-backed securities, a big jump this morning, up 21 basis points. So these are very positive, unexpected little gift we had. Now, new home sales. Now, this measures signed contracts on new homes. That shows that it rose 3.6% to a 698,000 unit annualized pace. Now, this is stronger than the market expected of plus 28,000. So this was really good. There was, however, in addition, an upward revision to November's report. So when we talk about what the total percentage is, it's really up 5.1% from the originally reported November figure. And now sales are up on new homes year over year, 6.7%. You're not really hearing this too much in the regular media, but it's a increase in existing new home sales. Now the median price was reported at 427,000. It's up 6.1% from November and 2.1% year over year. Now keep in mind the median price is the middle price of the home, not the average of what's sold, so it can be skewed by higher priced areas. Now, as far as inventory, new homes are showing 494,000 new homes for sale at the end of December. And based on the pace of sales, that is supposedly an 8.5 month supply of inventory, down from 8.7 months. Now, that you'll hear Diana Olick talking about, but she's really not going to explain the next part of it. However, only 118,000 of those 494,000 homes were completed, and 108,000 haven't even been started yet. And some of those may never be started. So when we look at the pace of sales versus homes that are completed, in other words, what you can really buy, the demand declines to 2 months supply, which is much tighter. That's the number we need to be talking about and focused on. This is a really, really important week that'll really give us a tale of what's going to be ahead for the rest of the first quarter as far as interest rates. Tomorrow, we've got durable goods orders and then a home appreciation reports from Case-Shiller, FHFA, and the home price index. So those are very good items that we need to look at to see the health of appreciation. Now, Wednesday, we get mortgage applications, And then we get the Fed statement and the press conference. Their meeting actually starts on Tuesday, but the statement of what they're going to do with rates. Now, there's a 98.5% chance that we're going to pause for rates. So no one's expecting a decrease or increase. But what's going to be really important is the commentary in Chairman Powell's press conference afterwards. So that's what we're going to be looking at Wednesday afternoon. Thursday, initial jobless claims, GDP, and pending home sales. So really big numbers there. We wrap up a big week with personal consumption expenditure and employment cost index. Now, the PCE is the Fed's favorite measure of inflation, and you have to think they're going to get a sneak peek at it when they do their press conference and what they're talking about. They won't say that they got a sneak peek, but logically, you think it's probably in there. Now, the 10-year bond is breaking through a dual floor of resistance at the 25-day moving average and a pretty tough Fibonacci level at 4.588. If this breakthrough to the other side is confirmed at closing of the day, there's a clear path to the 50-day moving average, which is 4.475. And we do see a pretty good likelihood that we could hit that number. So we have some things laid out this week that could benefit us. Let's help you get out there, get pre-approved, get some offers in for you, and help you get into a house. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Have an awesome afternoon.